Welcome to Mastering Mortgages, presented by Revolution Mortgage, the podcast that demystifies the world of mortgages, real estate, and homeownership. Our goal is to empower and inspire homebuyers, real estate professionals, and mortgage industry leaders. My name is Danielle, and I want to invite you to join me as I sit down with today's guest to talk about practical tips and valuable insights into the mortgage industry. Hi, everyone, and welcome to the Mastering Mortgages podcast. On this episode, we're excited to be joined by two special guests from Revolution Mortgage. We have Zach Wolf, a branch manager out of Houston, Texas, and Tori Doucette, a branch manager out of Auburn, Maine. Together, we're diving into the world of first-time homebuyer myths, tips, and expectations. Get ready for an enlightening discussion and maybe even a few laughs along the way. So, let's get started. First, I just want to say welcome, Tori and Zach, to our podcast, and we're so glad to have you here. We are just going to go over kind of a first-time homebuyer's guide, and really excited to cover some of that with you guys. But just wanted to start off with, we always like to start off with something a little bit more fun and off topic. So we wanted to play a this or that game. So we'll start with, and we can maybe just switch back and forth between the two of you. But Tori, would you, this or that, would you do hardwood floors or plush carpet?
Ooh, I'm actually a both. So I prefer hardwood floors in my downstairs, like my dining room, my kitchen, that sort of thing. But I actually do prefer plush carpet, like in the bedrooms. Like, I think it's cozier. I can't hear my kids as much, which is also helpful. So yeah, I'm a both actually, but hardwood is obviously great for market value. So
yeah. And you live in a colder climate, so I feel like you would be leaning more towards carpet, just not naturally.
Yeah. Keeps the tootsies warm for sure.
Yes.
You kind of just changed my mind, because I was going to be 100% hardwood, but in the rooms, carpet's definitely more cozy. But on the flip side, with Houston heat, hardwood or anything like that that cools off a little easier than carpet is nice during our summers when it's like 120 degrees.
Yeah, like in Maine, people have their houses just fully hardwood, but then they buy a throw rug that's literally the entire size of the room. And I'm like, I don't know what the point of that was.
That's so true. People totally do that. We have the wood-like tile, and that's perfect in the summer because it's so hot outside. That cools you down.
The wood tile is awesome, too, because that doesn't scratch. So, like, dogs running around and kids throwing Legos and stuff everywhere, it just bounces right off the floor, and it's good to go.
We actually used to have that in our bathroom, was like that wood tile, but you can do radiant under it. So it was so nice because it was like the best of both worlds.
That's cool, yeah.
Yeah.
All right, well, the next one we have here, and Zach, you can start, would be stainless steel appliances or colorful vintage ones. And this one I think is kind of fun because the colorful vintage ones are definitely making a comeback, it seems.
Yeah, the vintage ones, I feel like I see those in a lot of homes. And I think it depends on the home, but for me personally, give me stainless steel all day. I like the stainless steel look.
Yeah, same. I'd agree. Although our office is fully teal vintage, fridge and microwave, I think it is what it is. So we kept the teal going in the office, but I'm personally a stainless steel gal at home.
I think when the vintage, like when you do it right, and like you said, in the office, everything's one color. And if it goes with like the home itself or the office, it looks better. But yeah, stainless steel for me.
Yeah.
Stainless steel is definitely timeless, so can't beat that.
Yeah.
And then another one we have here is just gas stove or electric stove.
Personally, I've only ever had an electric stove. My parents have a gas stove and they love it. I know. I was going to say, I feel like I am missing out on some sort of secret gem, but I've never had a gas, so I have to say electric just because it's all I'm used to. And I can't cook to save my life, so, I mean, it's all I got.
I don't know if that depends on the stove, but I'll say this, for me, gas stove 100%, because I think I'm the opposite. I've had electric like one or two times, but mainly gas, and we have it in our house. And it was a lifesaver when we had the freeze, which, Tori, for you, you're like the freeze that was like 10 degrees is nothing.
Last night, actually, thanks. That's why I'm home.
For us, it was awesome because power went out, and I could still turn on the stove. We could cook. We could do stuff like that. So I love gas stoves.
Now, I think with the power outages, I would have to say gas stove as well. But if you don't experience that, then it's no problem. Well, we do have a couple more things here that we want to go over, so we can move along. But one thing I just wanted to bring up is, Zach, you just had a birthday recently. So we won't ask you how old you turned, but you know, you're looking like 21, so it's all good.
Well, I was gonna say 21. You hit the nail on the head, Danny.
Yes, perfect. And we just wanted to see, so what do you normally like to do for your birthday? Anything fun, or do you have a very like memorable birthday that you want to share?
Okay, no, right now for birthdays, we have a 2-year-old and my wife is pregnant, so we don't do much. Like, a fun birthday to me is hang out at the house. I get to grill, and if there's a good sports game on, football, basketball, anything, hopefully the LSU Tigers winning, but you know, I'm good with that. That's it, like, just to hang out. So that's my typical birthday: hang out, be with family, eat, drink, have a good time. That's typical birthday. Memorable, I mean, they all kind of, I feel like they all mush together. Like, you know, all 21 of my birthdays I've had.
Don't age yourself. Don't age yourself.
But I really think they all are kind of like that. Go out to eat, hang out with family. So they're all great. Like, that's typically what I end up doing. So they're all good. There's not one that truly stands out that was different than the others.
Yeah. Well, Tori, I know your birthday didn't just happen, but I did want to see, is there anything fun that you do, or do you have a really memorable birthday as well?
I am actually Zach Wolf Jr., and I am very, very similar. So something cool that I always have done on my birthday, which is just transferred on since I was an adult, is my mom always cooks me like my favorite meal. So we always have like my siblings, and, you know, we go over to my mom's house and she always cooks me just whatever I ask for. So that's always cool. I'm very, very chill on my birthday too. I mean, Jeff surprised me with like a couple like fun nights out when we've been out with like friends and family and stuff like that. But like, I feel like I am very like low key on my birthday. I'd rather just like kind of chill and go out to eat or something. I'm
Yeah, definitely.
That tradition sounds cool. What was the last meal that you had?
Oh my God, it's going to sound so weird to everybody because it's not like a traditional meal. So my favorite meal ever is called chicken and onions. And it sounds like so random, I know. But it's literally just like caramelized sauteed onions in like a wine sauce with chicken over rice. I don't know what it is, but she makes it. She's made it since I was a little kid, and I'm obsessed. I can't make it, obviously. As I mentioned, I can't cook to save my life, but that's like my favorite. So she slaves over the stove over that one because she has to like make sure the onions don't burn, and it's like a lot.
Yeah.
So yeah.
That's that special like mom's touch.
For sure. And she always makes me this log of cookie dough. Like there's like I think they're called molasses crinkles, and it's like my favorite kind of cookie dough. And she doesn't cook them. I don't allow them to be cooked. I literally just eat an entire log of cookie dough by myself. Yeah. I died of salmonella one day, so if you see me fall off the planet, I've died of salmonella.
Listen, that's half the time when me and my wife are sitting on the couch, you know, Netflixing or doing whatever. The cookie dough comes out. We're like, should we bake this? And you have this big batch of it, and we just start eating out of it. And next thing you know, you're halfway done with it.
Yep, exactly. Yep. Except I keep this to myself because I'm very stingy, so I don't share.
It's a dangerous road to go down. I think we've all been there.
Yes.
Yeah. Oh, yeah.
Yeah, well, I love that we're talking about meals and cooking and, you know, different types of stoves and all this stuff. I think that's a great segue into our topic for today, first-time home buyers. You know, there's definitely still a lot of people out there that are renting and are maybe thinking about becoming a first-time home buyer. So I just wanted to start with what are the most common misconceptions first-time home buyers have about mortgages? And how do you address them? And I'll let either one of you start with this one.
Tori,
you want to go, Zach? Okay. So for me, I find, and at least this is what I have as like a highlighted topic for like mentally, is obviously down payment, which I'm sure Zach will touch on, but I'm going to go the credit route. So for me, I think borrowers think they have to have perfect credit when they're first applying for a loan. And I think that there's a misconception about that. And realistically, there's so many loan programs that will go down to a much, much lower credit score right now. We got FHA at like 580. But realistically, I mean, if somebody is not having perfect credit because they've had their credit pulled a lot, they're young, they maybe just took out student loans, or they just recently bought a car, it doesn't have to be perfect. And I think that is a common misconception, is there's so many other loan programs out there that don't require perfect credit. Not even conventional loans require perfect credit. So I would say that that's something that I've tried to highlight in my teachings about, obviously your credit score does affect your interest rate and your eligibility, but it's not the end all be all. And there's certain things that you can do as a first time home buyer and just as a buyer in general to build that credit score back up very, very quickly. So I'll let Zach go from here, but that's, for me, credit's a big one.
Yeah, I mean, that's a huge one. That's a great one. There's two that I would talk about. Is one, you hit the nail on the head also saying, down payment. Like, people call and their parents or they heard from a friend that you got to put 10% down, 20% down when you don't have to, right? As a conventional loan first-time home buyer, you can put as little as 3% down. FHA, you can do 3.5%. But that's one big thing. And then what kind of coincides with that is they think, okay, well, I want to put 20% down because I don't want to pay mortgage insurance. And part of that is they think their mortgage insurance is going to be like $500 a month, when really it could be as little as $50 a month, as $75 a month. It all kind of goes with what Tori said. It comes with what's your credit score, what's your down payment going to be. That all is what makes up your mortgage insurance. So credit from what Tori said, down payment amount, and then mortgage insurance not being as high as a lot of first-time home buyers really do think it's going to be is a big one, I think.
And I think I'll even add to that is there's such a misconception as far as that 20% down being like the best loan option. Yeah. And it's so vanilla, but at the same time, if you counsel someone the right way, someone who has 20% down, great, good for them. Yeah. But they may have credit card debt that's $230 a month. I'd rather them pay off the $4,000 credit card at 18%, save themselves $230 a month, than put that $3,000, $4,000 down on a mortgage. It's going to be way more bang for their buck. So just getting that proper counseling and, teaching people a little bit more financial literacy as far as what's going to be the most advantageous for them as their overall financial goal is a lower overall debt. Yep.
Then I did that with someone. They were looking at 20%. We switched it to either 15 or 12%, but he had a truck note that he had like 20 or 25K on first-time home buyer. And we were like, well, let's take this 20 or 25K, take it off of your down payment, but your truck note now that's $950 a month is gone.
Yeah.
And he was like, oh, wow, I'm saving so much more money doing it this way.
I can afford that much more house. And again, when your house is an appreciating asset and your truck is a depreciating asset, it's way smarter to do that. Yeah, for sure. And so yeah.
One thing I just thought of also that's a big one that I've got recently, a few buyers that have called. A lot of first-time home buyers will call me and they just strictly want to go FHA. Like, that's what their friends told them. And Tori kind of mentioned this. It comes to different scenarios. Like, your friend might have had a 650 credit score, so they had to go FHA, and that's all they were pitched because that's the right option for that friend. Well, this other first-time home buyer might have a 760 credit score, and they don't realize that FHA is a great first-time home buyer product. You could do 3.5% down. Conventional, you could even do a lesser amount down. You could do 3% down as a first-time home buyer. So be open to seeing the different options of a conventional loan or an FHA loan, not just strictly one or the other.
Yeah, absolutely. It's definitely important to talk to a professional about those options and see what works best for you. Well, I want to dive into this just a little bit deeper too, and just talk about the current market and see if y'all had any extra points that you wanted to touch on, just with maybe what misconceptions you're seeing in the current market for first-time home buyers. And I will say too, we're recording this mid-January, so by the time this episode comes out, maybe some things could change, but I know there's a lot on the horizon for 2024.
Yeah. One thing that I think will happen, or that is happening, is as rates are coming down, you're seeing more people get into the market, obviously. And so, especially with a lot of first-time home buyers, they've never done it before, but when they see on TV, the rates are coming down, they're coming down. Prices are still high, right? They just are. That's where the value of homes are. But as the rates continue to come down, you're going to have more competition in there. And so some first-time home buyers want to wait. They're like, oh, the rates are going to drop to 5 point whatever at the end of the year, just a ballpark, right? Or even low sixes, right? They're like, I'm going to wait till that happens, and then I'm going to get in. The problem, or the thing they don't consider, is when they wait until that time to get into the market, now they're dealing with a bunch of other buyers. They can't negotiate on the sales price. They can't negotiate seller credits. So I think it's one thing, again, of educating them and talking to first-time home buyers about, here's why you want to buy now. You can refinance out of the interest rate that you have now, but you cannot refinance out of paying whatever $50,000 more for a home. Yeah,
yes, agreed.
So that's a big thing I think they're going to be facing as the year goes on.
I could not agree with that more. I feel like that is such a huge thing where people, I'm just going to wait till the rates go down. Okay, would you rather pay 30, 40? I mean, houses are appreciating at 8% per year nationally. So if you've got someone, that house is naturally appreciating by next year when those rates drop. And as every percent of that rate goes down, all of these all of these buyers are flooding the market. And now you're back to multiple offer situations. You're offering $20,000, $30,000, $40,000, $50,000 over asking price just to get your offer considered. No seller credits, no inspection periods. They're not realizing you could have been in that home for a full year at this point, paying down on the balance of your mortgage while building that equity, and then just refinance that interest rate. I know they say, like, it's so corny to say marry the home, date the rate, but it's so true. It's literally get into that house as soon as you can and just refinance that rate when the rates drop. I mean, it's inevitable. What goes up is coming down already. So yeah, I agree.
It's tough because, like, for me, I'm a very visual learner. So that's why I love to, and I'm sure Tori does the same thing. When we get a buyer, it's like, show them a mortgage code, show them all these things. And you could show them, hey, when you finance this at X percent and you're paying this amount versus when you go a little bit higher on the sales price but a lower rate, like, what's the difference in the payment? And then you're going to be gaining 4, 5, 6% appreciation over time versus having to pay that higher sales price later in the year. It just makes sense to buy and then, again, refinance out of the rate. You cannot refinance out of the sales price.
Yeah, agreed. And I think that, like, as far as like the challenges that they're going to see is, I mean, a lot of borrowers come into the market not understanding debt to income ratios. First time home buyers, they don't really get it, and a lot of them, they have some significant student loan debt. They're coming on board with a lot. So I'm finding with a lack of inventory is this mindset of a first-time home buyer needing to buy a single-family residence. Like, that's what's in their mind. I have to buy a house. And I was like, oh my God, you have such a huge opportunity to build yourself an investment property for the future. I mean, there's so many opportunities for these kids to get in with 5% down conventional now on a multi-unit up to 4 units is huge.
That's
FHA
wild.
still forever with 3.5% down. But if that was me, before I had kids, before I had a whole family to, house, I would have loved to have had someone to tell me, like, buy an apartment building. Just get into this and have that generate income for you. You'll be living rent-free. You'll have passive income when you move out of the property. I think that there is that misconception, not realizing and just thinking until you explain it to them, they don't realize what a great opportunity that is. If you already own a primary home, the likelihood of an underwriter understanding why you would want to go buy a 3-unit as a primary residence is probably unheard of. So you can't really do it after the fact. And if you're doing it after the fact, you're looking at 25% down. You're not looking at 5% or 3.5% anymore. It looks really like an investment at that point.
Yeah. If you would have taken 22-year-old Zach and said, hey, move out of that apartment complex, go buy a home, your friends can still come live with you. They'll rent the rooms from you, and y'all can still go out to Midtown or wherever and have a good time. Like, that's what I would have done. But,
for sure.
Hindsight's 2020. Now all we can do is try to educate people that are younger.
Yeah. Yes. I mean, of course, like, widening their search too. I mean, I think that, again, some of these home buyers, they're so set on, I want to be 10-minute drive from my work. Yeah. Well, are you willing to pay an extra $100,000, $200,000 for that house because it's in the city? Or are you willing to commute 30 minutes, have less competition, buy a house double the size for the same amount of money, and just to have those conversations? Because, again, I don't think it's not taught in schools. A lot of the parents these days aren't necessarily educating their kids to that same degree. And I think it's kind of our job a little bit as mortgage advisors to bring that information to them, because you don't know what you don't know, obviously.
Yeah, 100%. You don't know what you don't know.
Yeah, and I think, Tori, you may have jumped ahead a little bit here about another thing that we want to talk about. Oh, no, you're totally fine. It's a great segue here to just talk a little bit about what are some unexpected challenges that first-time homebuyers might face, and as a mortgage advisor, how you would advise them to prepare for those. Just, maybe think about it if we have somebody listening to this episode who is maybe wanting to be a first-time homebuyer, but has these challenges that they are facing that maybe they're thinking is stopping them from buying a home.
Yeah, for me, just back to the basics. What we're looking for that, again, borrowers may not realize. Like, they're thinking down payment, they're thinking credit score. For me, yes, credit is obviously a very, very important factor in qualifying. But for me, a debt to income ratio and a steady, consistent work history is also equally important. I think debt to income ratio for me is huge, because you could have a 8 credit score, you could make $10,000 a month in income, but if you carry a truckload of monthly debt, that really does have a huge impact on what you can qualify for. So I would say, and a lot of people say, oh, well, I've got $10,000 worth of credit card debt. I always try to explain to them, I don't care what your debt balance is. I care what your monthly obligation is on that debt. So you could have a $10,000 credit card. Your payment on that might be $50. That's going to have less of an impact to your debt to income ratio than your $4,000 truck balance that has a payment of $850. So just explaining those, again, educating and helping these kids realize, and it doesn't even mean kids. There's plenty of adults that are first-time home buyers, but just explaining to people like what we're looking for. Credit scores, they go in buckets. There's certain loan programs that are going to best fit certain credit scores. Debt to income ratio is across the board. Each loan program has their maximum debt to income ratio. And I think explaining that to people up front and kind of finding out what those debt loads are going to help us better navigate what's going to be a better financial situation for them, for sure.
Yeah, all of that is so true. And then you get that all the time when people call and they're like, I don't know if I should buy. I have $10,000 in credit card debt. And you're like, that's not what we're looking at. But I think another challenge that buyers are going to face is going to be what we kind of already talked about, the competition. And so what comes with that is I know we're talking about this a lot, but it's education, right? So educating them on getting them the numbers up front so they really understand, because what's going to happen is when people start buying these homes as the year goes on, you're going to have people that are not first-time home buyers that know the process, or they're paying cash, right? They know how to get a home and they know what to expect. So they're ready to pull the trigger. They're not nervous about it. They've done it 3, 4, 5 times. First-time home buyers, understandably, are a little more nervous. They got to find the perfect home sometimes. And, okay, now we got to look at payment. Now we got to double-check the payment. Now we got to double-check the cash to close. I don't know if I want to buy. And by that time, the house may be under contract when there's a lot of competition because rates are dropping. So I think that's what they're going to face that's going to be really hard, is winning offers. And then with that being said, when we get the chance to educate them, now we can come in when that perfect house pops up. It's, hey, we can do a very fast closing if we need to. If your agent wants to waive certain things, we can waive certain things. We can structure your loan correctly to help you win this offer. And because we've talked about this 1, 2, or 3 months in advance, you've seen numbers, you understand everything. The first-time homebuyers hopefully then aren't as nervous to go ahead and pull the trigger and buy that property, or at least put the offer in and try to win these deals compared to people that are a little more seasoned, with buying homes.
I think another great thing to mention as far as a challenge, and this is more than likely market-wide, this is not specific to any state, is a huge lack of inventory. This has been a years long problem, decades long problem, and it's just compiling. As populations rise, obviously there's not enough houses being built, and I think that that's something that first-time home buyers are really going to struggle with moving forward, even for the next several years. Even though construction rates are up in many areas, I think that's something, again, educating them as to what loan options may be available to them. Maybe it's a multi-unit property. Maybe it's an existing home. Maybe it's something that needs a little bit of work. But new construction is also going to be a huge item on the table for these kids. These people, I should stop saying kids, because these people, because they're not kids anymore anyway. But these people that are buying their first home, new construction, I think, was out of the realm of possibility for a lot of people because it used to require 20% down. And I know that Revolution does have a really unique one-time close product that's available to us with, as little as no money down on certain loan programs, 3.5% down on conventional, 3.5% for FHA, 5% for conventional, just getting them into a brand new house where all they got to do is secure a piece of land, which we can close on as well. But just to not have that or a fight, that multiple offer situation, building your own home is a viable option for a lot of first time home buyers now, which it really was off the table without that huge down payment before. So
knowing your options will help, mitigate some of the things that they're going to have to combat against with this year. And so knowing the construction loan and everything will help buyers get into homes, first time home buyers.
Yes, absolutely.
Those are all great points that you guys have made, and just good things for people to be aware of, but also just kind of how to tackle those. Y'all provided some good solutions to those challenges. So hopefully, people that are listening in, if we have first time home buyers listening into this episode, they can take that away and, remember those tips, but when it comes to buying a home. But I just wanted to also touch too on, in your experience, what are the key factors that contribute to a successful mortgage application?
Zach?
Yeah, and Danny, sorry you broke out. So you said key factors that contribute to a mortgage application. Is that right?
A successful mortgage application. Yeah. So. Mm-hmm.
Man, I'm gonna say it again, but education. I think, number one, having a good real estate agent and a good lender, right? Because you could get the application done online, not know anything about it, but having a good agent and a good lender, and then to me, the most successful part of it is really education, especially with first-time home buyers. It's get the application done, explain everything to them. It's like Tori said, if they don't qualify or if they do, and they're not sure, okay, I have this $10,000 credit card debt. Does that really affect me being able to qualify? Being able to tell them, hey, we only look at what your monthly obligations are, not your full debt. So explaining a bunch of things from debt to income to, hey, I got a big bonus this year for a sign-on, so my income should be much higher. Well, it's a one-time bonus. We can't use that as bonus income technically. So really explaining everything to them, and that's why, you set up a call initially and have the client taking time to commit to us as well as us committing to them, right? Setting up a 30-minute call, explaining everything to them, going over a mortgage coach, really looking at closing costs, cash to close, monthly payment, and just education. Like, to me, that sets up the mortgage process and application in the best way possible for first-time home buyers, because I try to pride myself on really educating these buyers. And what you notice is throughout the process, or when the perfect home pops up, they know the numbers. They're not nervous. Then we get to the closing table. They already have a very good idea, or before that,
they're not surprised, right?
Yeah, they're not surprised. They have a very good idea. And I've had so many buyers that are like, man, I heard horror stories or this or that. Y'all made it so easy. And then one other thing also that Revolution has is our upfront underwriting, getting a buyer through underwriting before they're even under contract. Now you have a good approval up front for them, so you really can set the table for what to expect when that first house does pop up they want to put an offer on.
Yeah, I fully agree with that. I mean, again, reiterating that education is key. Like Zach said, I mean, having a realtor that speaks the jargon, having, a loan officer that will explain things in very simple terms, because it's not a difficult process. It's not even a complicated process. It's really cut and dry, and it really just comes down to, how do you explain it to people? Is it digestible? Is it something that they're going to understand? I think what I would ask, or what I would say that first-time homebuyers should have, is have your documentation. If you know you want to buy a house within the next year, keep your W-2s, keep your tax returns, keep your recent pay stubs, keep your bank statements. And I mean all pages, even if they're blank. It's like one thing.
What?
You need that blank page? Why would you need page 6? Why? It says nothing on it. Well, I don't know that has nothing on it. The underwriter doesn't know it has nothing on it. So but it does all boil down to education, because that is a conversation we do have with borrowers up front is, hey, this is what we're going to need when you go under contract. So start gathering that stuff now. And if we can, or if your situation warrants it, let's upfront underwrite it. If it's a little complicated, it just, for me, it like seals the deal. It makes them feel comfortable. They know what they're looking at for estimated cash to close based on a certain price range. The realtor feels confident because they know the loan's already been underwritten. I just think that there are so many ways to make those buyers, first-time home buyers, like they're so threatened by competition, but we can make them really, really strong if they just, again, take our advice, do the upfront underwriting, follow the steps. And again, they're super simple steps that are digestible for anyone.
Yeah, I mean, with us, like my process is really, it's talk to a client on the phone when they first call for 15 minutes or whatever the case is. And that first call is to just hear about their situation. What do you got going on? Is there anything funky with your income? Just whatever. What questions do you have, especially as a first-time home buyer, which a lot of times on the first call, they don't even know what to ask because they haven't done it before. And then we get the application, and then I tell them, hey, on the second call, we're going to make it a 30 to 40-minute call. I want you to commit that time to us because we're going to commit it to you. We're going to go over a mortgage coach. You are going to have questions because now we're looking at numbers. We're going to go over numbers. We're going to go over a mortgage coach. We're going to go through everything. And that really, really sets the precedent for the rest of the time moving forward until they find that home. And then, like you said, we get all those documents. So I always say, give me these documents up front so we can verify what you put into the system, but also so we can get you into upfront underwriting because now you don't have any doubt in your mind. Your realtor doesn't have any doubt. I can call the listing agent and tell them, my buyer's already been through underwriting. They're solid. Right. We can close very quickly if you need us to, Mm-hmm. So, yeah, I think education is I think that's like the biggest part of it.
The biggest, yes. Like I said, documentation and education, I think, are seal the deal for sure.
That's like a song. Documentation, education, education.
Let's go.
Definitely a rhyme and a rhythm that you got going there, Zach. I like it.
We're making moves over here, Danielle.
Yeah.
We're trying.
Yeah, after this, we'll record that song.
Your intro song, documentation, and education.
Now I just need a good stage name.
Ooh, let you work on that one.
Throw that into AI software. You probably did something real funky.
Yes. Yes. Well, back to what we were talking about. I think, yes, y'all definitely made great points about just education part of it. And especially for first time home buyers, this is probably something new that they're not familiar with. And it's so important to just talk to a lender that can educate you and talk to a realtor that can also educate you, that are going to be on your team during the process. But then once you have the documentation and you are educated for the process, you'll just go into it being confident. So I think that is super important.
Yeah, I would just add to that. If you're a first-time home buyer and your loan officer isn't willing to have at least a 10 to 15-minute phone conversation with you about your financial goals, about your actual financing scenario, find another lender, because there are so many call centers out there that don't properly educate, and they don't even have the conversation with them to understand what needs to be asked or what might be needed from a documentation standpoint, that run the other direction. I mean, find someone that's actually going to counsel you, that's going to hold your hand through the process, that you feel comfortable with. If you leave the conversation and you're completely overwhelmed and you have no idea if you're even pre-qualified or what you're pre-qualified for, it's time to find a new loan officer, like genuinely.
It's amazing to me how many times you get like a buyer who is pre-approved. They're solid, they're good, but they're a first-time home buyer and they literally just got a pre-approval letter. That's it. And they don't know anything else outside they are pre-approved. And so when you walk them through, if they're talking to us and another lender and the other lender did that, when we walk them through the numbers, they're like, oh my goodness, I didn't realize I have options. I can buy the rate down. I don't have to buy the rate down. Just all the different things that go into the closing costs. So it's definitely what Tori said. If there's a lender that won't educate you and you're a first-time home buyer, call Revolution Mortgage.
Switch. Yeah, make the switch. Same thing too. I mean, if you're leaving confused at all, or if you've just filled out an online application, I get that a lot, where a borrower fills out their own information and they say, oh, well, I got a pre-qual letter from such and such, and it was an online lender, and they turn around and they say, I was qualified up to $500,000, and I'm running the scenario, asking the right questions, and I'm coming up with a completely different number. That's also another situation why we have to ask these questions and why we dig a little bit deeper to make sure you're not setting yourself up for failure down the line when you have an earnest money deposit, when you've already ordered your appraisal, when you've already had your home inspection. that little pre-qual letter that you printed yourself from your, online lender that you did a 5-minute pre-qual application with is not going to be worth it in the end with what you're gonna lose and have to start all over anyway.
Yep, 100%.
Yeah, it's so important to be working with a lender who is going to be thorough and make sure that you're looking at all the options. And honestly, even a realtor too. I mean, I know a lot of lenders work with trusted realtors, and there's a reason they work together and they build that trust and build that relationship because they want it to be a smooth process. And I think that is just so important. And of course, like you said, Tori, there's plenty of great lending, like loan officer options out there. So you don't have to settle for less, especially if you're a first-time home buyer. But I think this has all been such great information, and hopefully the listeners that we have listening in on this episode are just taking notes and taking all these good little golden nuggets and are feeling hopeful for their home buying process. Just wanted to close with looking back. What is one piece of advice that you wish you could give to your younger self? And now I want to put this into the perspective. You can answer this either as your younger self at a professional standpoint, as a lender, or just starting in mortgages, or as a personal standpoint whenever you're getting into buying home.
That's a good question. We kind of talked about it earlier. From a personal standpoint, for me, I lived in an apartment, for a few years. I would have said, it's okay to live with mom and dad for one more year. Like, do that right when you get out of school, save up money, get the down payment, and buy a house. Like, it's crazy to think if I wanted to buy a house years ago, I could have done it, but I just didn't have the knowledge or the education to do it, right? I didn't know. So I would have said, I would have bought a house. I would have looked back, committed to saving money, buy a house, and then you could still be in the same area as where I lived, but I could have had in Houston, it would have been a townhouse, had my buddies living with me, paying for my equity, paying for my mortgage, building appreciation. And then Tori mentioned this earlier, but then I could go and rent that out and buy another home and then buy another home. So that's what I would have done for sure from a personal standpoint.
I think it's so funny because we're like completely immersed in finances all day, every day. But Genuinely, I really wish financial literacy. I came out of college I couldn't even buy my own cell phone. And I mean that genuinely. Thank God Jeff was a tiny bit older than me and had terrible credit, actually. But he had credit. I had nothing. I couldn't even get a cell phone as a college graduate. That is crazy. But I had no financial literacy. Like, they don't teach it in schools. My parents didn't think enough to teach me about it. They probably learned on their own too. I feel like, it needs to be taught in schools, but for me, it's even more so than a first-time home. I needed credit. I just needed that. Someone to say, become an authorized user on your parents' credit card if they pay their debt on time. Take out a small loan when you're younger, even if you don't need to, just to build yourself something that shows the credit bureaus that you are financially responsible. You make your payments on time. So that way, when you are ready to buy a home, you're not starting with nothing. I can't even tell you how many first-time home buyers credit I've pulled that show 0 scores, 0, 25, 27 years old, 0 scores because they don't have any debt, which is excellent for them. If they had a credit score, they'd be a slam dunk homeowner, but they cannot qualify for a mortgage without a credit score. So that's really important for me, is financial literacy and teaching these kids the importance of credit, the importance of paying their bills on time, the importance of not letting things go to collections, the importance of holding a steady job with, a minimum amount of hours. These people think that they can, get a part-time job and work 12 hours one week, 55 hours the next, 20 hours the next. It's very variable. And I think that they're not realizing what that's going to do to them down the line when they want to buy a house. So for me, financial literacy is what I would have liked to have learned a lot earlier than I did.
In our next life, right?
In our next life. And my children will be educated, I tell you.
You can pass it down.
I'll pass the torch for sure. Yes.
Oh, yeah.
Yeah, no, that's great. And I just wanted to give you guys the opportunity to, if you have anything else that you want to touch on just with this subject or anything else that you guys would like to add. I mean, if not, that's totally okay, but just wanted to leave the floor open just in case.
For me, I just want to end on saying this year, I personally think is going to be a great year for any buyers, but first-time home buyers or anyone, I think it's going to be another year of, values going up. So getting into the market earlier rather than later is going to be great. But also just get in whenever you can, right? If the payment's where you want it to be, don't worry about rate or this, that, and the other. If you can afford it right now, the payment's where you want, and you're comfortable doing it as a first-time home buyer, do it. Because long-term, you're going to hold this home. It's going to appreciate over time. And I think 2024 is going to be a slam dunk year for real estate. So that's kind of what I want to end on.
That was an amazing last statement because I could not mimic that more perfectly. Like literally, if you're comfortable with your monthly payment, and that should really be the discussion, is if you're comfortable with the overall monthly payment, go for it. You can always refinance. Your house is going to appreciate. There is, I don't believe, any sort of bubble coming. There's not enough inventory for there to be a market crash, a housing crisis as far as values dropping. I think, again, with rates coming back down, more buyers are entering the market, which is going to continue to have values going up. So get in as soon as you can, because you can always refinance that interest rate. Just keep a comfortable monthly payment. You don't want to be house poor, but you also don't want to be buying a year from now for, $500 more a month either. So talk to somebody that you trust, that you feel like you can listen to their advice. Just do that.
Crushing it.
Yeah.
Crushing it.
Yes, I love that. Well, it's been so fun to have you guys on this episode. And just to kind of recap here too, if you are a loan officer or a realtor that's listening into this episode and working with a first-time home buyer, or if you are a first-time home buyer listening into this episode, just remember it's so important to be educated, also to have your documentation ready, and just speak to a professional. And I know, try not to laugh. I just have the song in my head here in the background. But yeah, so just get educated and have everything in line, in order. And then also just talk to a professional who's going to get you ready to go and be a homeowner before 2024 is over, because it's definitely going to be an exciting year. So you don't want to wait till next year either. But again, just want to say thanks, Tori and Zach, for joining us. It's been so fun to have you guys. And
thank you. Likewise.
Yeah, thank y'all for setting this up. This is awesome.
To stay up to date with our podcast, please subscribe, follow us on social media, and visit our website, revolutionmortgage.com, to learn more about how we are revolutionizing the mortgage industry. We hope you enjoyed today's episode, and we'll see you next time.